So I have all the updates that will affect your individual IL 1040 tax return this year. There are a couple of big changes coming on, but before we get to the big changes, we'll just do the general housekeeping ones. The exemption allowance for 2023, it's going to stay at $2,425. The original due date is April 15th, and April 15th this year actually falls on a weekday, so we do not have to worry about a holiday or a weekend. So all the money will be due and postmarked to the Illinois Department of Revenue by April 15th, 2024. Everyone is granted an automatic 6-month extension to file the return. So you've got 6 months to get the paper return either filed electronically or mailed into the Department of Revenue. That needs to be done no later than midnight on October 15th of 2024. If you're making estimated payments for 2024, you should be making 4 equal quarterly installments. And to make the estimated payments, you make them based on 90% of the current year tax liability, which would be the 2024 tax liability, or 100% of the prior year's tax liability, which would be 100% of your 2023 tax return, to avoid any penalties, as long as you're making them on time. The due dates are April 15th, June 17th, September 16th, and then January 15th of 2025. All of those dates take into account any weekends or holidays that fall around the due date. Now, for our first big change that we have for individual income tax, there is a new credit this year. It is called the Volunteer Emergency Worker Credit. For tax years beginning on or after January 1st of 23 and beginning prior to January 1 of 28, each individual who serves as a volunteer emergency worker for at least 9 months during the taxable year, and they do not receive compensation for their volunteer emergency work in an amount greater than $5,000, they may apply for this credit. This is going to be a non-refundable credit. So with it being a non-refundable credit, it will be reported on your schedule ICR, just like your property tax credit and your kids' education credit in grades K through 12. This credit can also not be transferred, and you cannot carry it forward. You can just use it to lower your tax liability to 0. What is a volunteer emergency worker? A volunteer emergency worker is a person who serves as a member other than a full-time career basis of a fire department, fire protection association, or fire protection district that has a fire department identification number that has been issued by the state fire marshal's office. This person also cannot serve as a member on a full-time career basis of another fire department, fire protection district, or fire protection association, or of a government agency. A volunteer emergency worker also includes just the firefighters. It does not include the people who volunteer on the fire district as just an EMT. If they volunteer as an EMT and a firefighter, they will be eligible to apply for this credit. When it talks about a full-time basis, I know in Springfield, the fire department is paid. That is their job, is to be a Springfield firefighter. They cannot qualify for this credit, even if they do volunteer for a local fire district. Also, when it says government agency, I know the airport in Springfield, Illinois used to have a National Guard unit, and that was their job. Through the National Guard, they were the fire department on the airport. That is what it's talking about, a governmental agency. It's not talking about me working for the Department of Revenue and then volunteering for my local fire district. Because my job through the government agency is not to be a firefighter, I can still apply for this credit if I meet the 9-month qualification and receive less than $5,000 compensation. What is this credit? The volunteer emergency worker credit is a $500 non-refundable credit that can be used to reduce your tax liability to zero. This credit is awarded to volunteer fire service emergency workers that apply for the credit, qualify for the credit, and are awarded the credit. And the reason we are talking about qualifying, applying, and being awarded is because when legislation was passed, there is a $5 million cap placed on the amount that we can issue. With this cap and the fact that we're issuing them in $500 increments, it's going to be first come, first serve for the first 10,000 people who apply, qualify, and awarded. With this being just to reemphasize again, as a non-refundable credit, it is applied to your tax before withholding and before any refundable credits, such as your pass-through entity tax, your pass-through tax credits, and any earned income credit. This non-refundable credit is applied earlier on the return. This will only reduce your tax to zero. It will not take it below zero. To qualify for this credit, you need to have served as a volunteer emergency worker for at least 9 months during the taxable year. You also cannot have received compensation for your services as a volunteer emergency worker for more than $5,000 during the taxable year. Several of these fire protection districts offer a stipend-like to come to the monthly meetings, to go to certain training, things like that. They reimburse their volunteer firefighters for. And as long as they do not do that in excess of $5,000, they will be eligible to apply for this credit. You must be included on the list provided by your local fire department, district, or office to the state fire marshal's office by January 12th, confirming that you volunteered for at least 9 months and you received less than $5,000 compensation for your volunteer firework. The fire chief is going to take that list and submit it to the state fire marshal office by January 12th. These people are not going to be able to file their return as soon as we bring up electronic filing and open the doors to file. And that is because they cannot start applying on our website until February 1st, and it's tentatively set for 8 a.m. So you're going to have volunteered at least 9 months. You're going to have received less than $5,000 compensation from your fire district. You are going to have your fire chief submit your name on the list to the state fire marshal's office by January 12th. And then on February 1st, you're going to have to go to our website for the Department of Revenue and apply. The application is supposed to open up that day at 8 o'clock in the morning. Then once you apply, you need to be one of the first 10,000 applicants. When you apply, you will be given that application will have a time and date stamp. So we know who's came in first based on the first come, first serve that we're going to issue this credit. Make sure that you're included on the file that will be sent to the state fire marshal's office by January 12th. So check with your fire chief. make sure that they are putting you on the list that is coming over to us. Because once your fire chief submits it to the state fire marshal's office, the state fire marshal's office will then forward that list on to us. So we will have all of that information verified up to that point that's coming through to us. You can look on the state fire marshal's website. There is to be a portal or a login place on their website so you can verify that. If you're not on there at that time, you need to contact either the state fire marshal or your fire chief. We cannot, at the Department of Revenue, do anything about you not being listed on the state fire marshal's website. How do I apply for this credit? On February 1st, go to the online application and complete the application process. You need to have all of this information that we're going to go through here when you apply. The first thing that you're going to need is a first and last name, the way it's listed with the state fire marshal's office. If your name is Timothy Smith and the fire chief submits you on that list to the state fire marshal as Timothy Smith, then when you apply on our website, you will need to apply as Timothy Smith. Do not apply as Tim Smith. Or if your fire chief submitted you as Tim Smith and your full name's Timothy, you need to apply the same way with the name that your fire chief submitted you to the state fire marshal office. You're going to need to have your complete address. We're going to need to know your complete social security number. We're going to need to have a valid email address. And I'll explain here in a few minutes why you need a valid email address. You're also going to have to list the fire district, department, or association's name that you're a volunteer firefighter at. You're going to have to put your fire chief's name, the city or county location that your fire department is located in. If your fire department is in Rochester, then you can, when you list Rochester Fire Protection District, pretty good giveaway as to where that's at, but you still need to put Rochester because there may be a Salt Creek Fire Protection District out there. There is no town Salt Creek. You would need to list the county that Salt Creek is located in. Then you're also going to need the volunteer specific state fire marshal identification number. This is something the volunteer firefighter will have. If the information that you submitted matches up perfectly with what came over from the state fire marshal's office and you're one of the first 10,000 applicants, you will receive a certificate verifying your credit. If the information you submitted does not match the information provided by the state fire marshal, you will receive a denial of the credit. A good example of that would be is if you're not on the list from your fire chief to the state fire marshal office. So we have nothing to match up against. You will get a denial of the credit. If there's a question about the information you provided, we will contact you via email. This is why it's very important that we have a valid email. Once we contact you by email, we will be requesting additional information. That additional information is going to have to be submitted back through that email address that we sent you the letter saying, hey, we need to know we need some information. You'll have 10 business days to submit that information we're requesting. If you do not respond within the 10 business days, you will forfeit your credit. Now, that's not saying you can't go back in and start the application process all over, but depending how long this takes, we may already have the first 10,000 people. So once they get that email, you need to respond as soon as possible with whatever information that they're requesting, so we can get this credit approved if you're eligible for it, or denied, and then we can let number 10,001 come in. Can I get a refund off of this credit? The volunteer emergency worker credit is a non-refundable credit, which means, again, that credit is only able to reduce your tax liability. It cannot result in a refund. This credit will be applied to your tax liability after we apply any of the property tax credit. Then we're going to apply any of the kids' education credit in grades K through 12. Then if there's any tax left over, we will apply this $500 volunteer emergency worker credit. If you don't need it all, that's fine. But if you do not have a tax liability, we're asking, please don't apply for it, because once we award this $500 credit, that $500 is taken out of that $5 million pool. And if you don't use any of it, it's $500 that nobody is going to get to use. If we issue you $500 and you only need $300 of your credit to lower your tax to zero, that extra $200 will not be added back into the pool. So if you know up front that you do not have a tax liability, then do not apply, because you're not going to use it. And that's going to keep one of your fellow firefighters from being able to apply, who could use the credit, unable to use it. How will I know if I receive this credit? After you submit your online application, if everything you submitted matches up perfectly and you're one of the first 10,000 applicants, you will receive an email from us. That email will come from rev.vewcredit@illinois.gov. And in that email, it will give you instructions on how you can go in and access your certificate verifying that you have your credit, so you can get the credit number to put on your tax return. If the information doesn't match, so you're not on the list that came over from the state fire marshal's office, we will send you out an email from that exact same email address, but this time it will be denying your credit. If there's problems with your application, we're going to do everything we possibly can to see if we can see why isn't it matching? What's making it have issues here? We're going to do everything we possibly can to see what the problem is. If we need additional information, we will send you an email again from the same email address, rev.vewcredit@illinois.gov, but this time they're going to be requesting additional information. It's when you get this email from rev.vew that you need to submit whatever information is being requested back to the Illinois Department of Revenue within 10 business days. You cannot bring it into one of our district offices. You cannot drop it in the mail and mail it in, and you cannot upload it through our MyTax portal. It has to be done to this email address. And the reason behind that is we're trying to get these approved and processed as soon as we can, because we are holding you up from filing your tax return, because we've already started filing returns at this point in time. And if you don't respond within that 10 business days, you will forfeit that credit, and we will move on to the next firefighter in line, because at that point in time, they don't know what status theirs is, so they're waiting to file their tax return. You cannot use this email address to check on the status of your credit. We are going to have a separate lookup feature on our website, similar to our refund lookup, and when we had the rebates, the rebate lookup. It will be similar to that, where you can go in, enter specific information, and be able to check on the status of that. That one you'll be able to check on 24/7. But do not respond to this email address wanting to check on the status. They will not verify your status off of that. It's only going to be an approval email coming from this email address, a denial email coming from this email address, or, hey, we need more information. Please send us whatever we need within 10 business days. That's what that email address will be looked for. Okay, now that you've been issued this credit, how do I use it? I've been approved. I volunteered my 9 months. I had less than the $5,000 in reimbursement. I was on the list of my fire chief sent to the state fire marshal. State fire marshal sent it to Department of Revenue. I went online on February 1st and applied. Now I've been approved. What do I do next? You're going to put this on your schedule ICR. All we have done is we've taken the ICR and we have expanded it. It is now 3 pages. And the volunteer emergency worker will be on the back of the first page. It is pretty easy to fill out. On line 10A, if the primary taxpayer is the one with the volunteer emergency worker credit, you're going to list their certificate number on line 10A. If it's the spouse that has the volunteer emergency worker credit number, they're going to list it on line 10B. If it's a joint return and they both have the credit, then they will each list their individual number, and each one of them will be eligible for up to $500. So on line 10C, when it tells us to enter 500 if it's you, or $1,000 if a joint return both had the credit, 10C will have either $500 or $1,000, because that's the amount that was awarded. So if you're both firefighters and you both qualify and you both apply and both are within the first 10,000, you will each get a $500 volunteer emergency worker credit. And that will go on line 10. Line 11 works just, 11 and 12 work just the way all the other lines on the property tax or on the ICR work. It wants to know, compare your volunteer emergency worker credit with your tax. Whichever amount is less, you're going to put that on line 11. And then line 12, you're just taking what you were able to use of your credit, subtracting it from your tax. Here's what's left of your tax. And that's the same way it works. 10 or 11 and 12 work for property tax and for the education credit. Some helpful reminders when it comes to this credit. The fire chief must submit all eligible volunteers to the state fire marshal office by January 12th, who will in turn send that list to IDOR. We will use that list to match up with everyone who applies to our portal for this credit starting February 1st. Another helpful reminder is when you apply for this credit, please use the same name that was used when your fire chief submitted it to the state fire marshal's office. So if you've got Timothy Smith there, use Timothy Smith on ours. If you're not sure how the fire chief submitted it, you can go out to the state fire marshal's office and they will have a lookup feature on their website so you can verify it that way, so you can start out fine when you apply on our website. Go ahead and plan on either printing out the certificate or downloading it to your laptop or computer so you have that to keep in your tax records. That's just to be on the safe side. If you're a first-time filer with Illinois, you are still going to be able to apply online for this credit. The plans are for you to use your Illinois driver's license. And again, as a reminder, all correspondence will be done through email. Since we're on a short turnaround time and we're doing this after the taxes have already started being filed, and we're holding people up from filing so they can see if they are one of the first 10,000. That's why we're doing it via email. And all that email correspondence will come from rev.vewcredit@illinois.gov. This email address you cannot use to check on the status of this credit, though. They will have to go out and look that up on our portal on our MyTax website. This is what the new ICR is going to look like. Front page, there's no changes other than the bottom two lines have been taken off of the front page because there's property tax credit. Then right below it is the education for your kids' education expenses in grades K through 12. And on the back of the second page is where the new volunteer emergency worker credit goes. Section D is what was at the bottom of the front page. It's now been moved to the bottom of the second page, so we can add up all three of your non-refundable credits if you have more than one. What is on line 13 of the schedule ICR is what you're going to carry forward to line 16 of the Illinois 1040. That amount will be the total of your property tax credit that you were able to claim, your kids' education in grades K through 12, as well as your volunteer emergency worker credit. Just carrying it over in one nice, neat little bundle. And then the second page, or page 3 of the schedule ICR, is the education worksheet for your kids' education in grades K through 12. Okay, that's it for the volunteer emergency worker credit. One credit, the K through 12 instructional materials and supplies credit. I always refer to this as the teacher credit because this is a credit that the teacher gets to claim. Everybody knows that teachers take money out of their own pockets to put into their classrooms, to get the classroom started at the beginning of the year, or to keep it running throughout the year, buying the little supplies or whatever is needed, the little incentives, the stuff for the treasure chest, all of that stuff that comes out of their pocket. We allow them a credit on the Illinois return, provided they are a teacher, instructor, counselor, principal, or aide in a qualified school in Illinois for at least 900 hours during the school year. This credit is one that you can carry forward on your tax return. So if you don't use it all, you can save some of it for next year. In order for us to carry it forward, it's done on the 1299C. This credit is allowed to be carried forward for 5 years. This credit is nothing new. It's been out there for 4 or 5 years. It's just in the past, it's been a $250 credit. Starting with January 1 of 2023, that's been increased to $500. It's still the same rules. If both taxpayers on a joint return are educators, they can each claim this credit. And the credit is going to be the lesser amount of what they actually paid, or starting now, $500. I know most teachers spend way more than $500 throughout the school year to keep their classroom up and going for the year. But if they would spend less than that, then that would be what their credit maxes out on. Nothing's changed on the 1299C. It stays the same. The only thing that's changed with this credit is that the teachers got a raise from $250 to $500. Now, earned income credit. It typically is a pretty easy one. Earned income credit has gone through several changes this year, though. The first change is if you claimed federal earned income credit, last year you were able to claim 18% of what you claimed federally. This year you can claim 20%. And that is for tax years beginning on or after January 1 of 2023. Illinois has expanded the qualifications for Illinois earned income tax credit beyond federal qualifications. So now you may qualify for Illinois earned income credit, but you weren't able to claim it federally. That's where our big changes are coming at. Another little minor one that it's going to take a while to get everything adjusted is you will see some things referred to as EIC for earned income credit and EITC for earned income tax credit. They are the exact same thing. We're trying to go and be all uniform here in Illinois. So we're in the process of changing everything over to EITC, but you will still see some things that say EIC. Just know those are the same. Now, for the people who did not qualify federally, but now they may qualify for state federal or state earned income tax credit, here's that category. In general, if you qualified for federal earned income tax credit, you also qualify for the state. Starting this year with our expanded qualifications, you may now be able to claim Illinois earned income tax credit if you meet all the federal qualifications, except you were excluded from federal because you have an I-10 number, which is an IRS issued individual taxpayer identification number. That disqualifies you from federal earned income tax credit. If you have an IRS issued I-10 number, you can now claim Illinois earned income tax credit. If you were 18 to 24 and had no qualifying children, or 65 and older and no qualifying children during the tax year, you also qualify for Illinois earned income tax credit. You still need to meet the same federal earned income guidelines. That did not change. The only thing that's changed is as having an I-10 number, you were excluded from federal. If you were 18 to 24 or 65 and older and had no qualifying children, you were excluded federally. You now qualify. Here is the federal earned income tax credit income limits. This is the same federal and state. This chart will also be in our Schedule E/EIC because that form has now expanded. We will also have it in the instructions for the Schedule E/EIC. In addition to staying, you have to meet the federal income guidelines. You need to have investment income below $11,000. You can't have filed the federal form 2555 foreign earned income form. You have to meet certain rules if you're separated from your spouse and not filing a joint tax return. You also have to meet federal special qualifying rules for military members, clergy members, and taxpayers and their relatives with disability. You have to meet federal rules that state a qualifying child may not be claimed by more than one person. So what this is saying is if my daughter has a job, files a return, and she earns less than the exemption allowance, she can claim herself on her return. She meets the 18 to 24 age bracket. She has no kids, but I'm claiming her on my tax return. She cannot claim herself as well and for earned income credit. She can still file her tax return and claim her exemption because she made under the 24, 25 and she'll get all of her withholding back, but she will not be eligible for Illinois Earned Income Tax Credit. And for Illinois Earned Income Tax Credit, a valid social is not required for you or your spouse or any qualifying child, but you have to have the IRS issued individual taxpayer identification number. We still will not let you file with an applied for status for a social security number or ITIN number. You need to wait for both of those to be issued before you file your return. That has not changed. The only thing that this has changed when it says you don't have to have a valid social, that's because you have to have a valid ITIN number. You've got to have one or the other. Now, what qualifies as a child? For the age, the child can be any age and permanently and totally disabled at any time during the tax year. They qualify. They have to be under the age of 19 at the end of the year and younger than you or your spouse if you file a joint return. If they are a full-time student for at least 5 months during the tax year and younger than you and or your spouse, the child can be under the age of 24. So if they're a full-time student for at least 5 months, they bump the age up to 24. As far as the relationships, they must be your son, your daughter, your stepchild, adopted child, foster child, brother or sister, half brother or half sister, stepsister, stepbrother, grandchild, nephew, niece. When it comes to residency, they must live in the same home as you in the United States for more than half of the tax year. They also have to have a valid social or ITIN number. When it comes to filing requirements, they must not have filed a joint return with another person, so their husband or wife, to claim any credits such as the Earned Income Tax Credit. Your child can file a joint return only to get a refund on tax withheld from their paycheck. Now that we've expanded this, the next question is, okay, I don't qualify for federal. That was always my basis to go through and figure the percentage. How am I going to do that this year since I now qualify for Illinois Earned Income Credit, but I don't qualify for federal Earned Income Credit? We've helped you out. There's an Illinois Expanded Earned Income Tax Credit worksheet. You will use that to calculate what your federal Earned Income Credit would have been using the Illinois Earned Income Tax Credit basis. If you check the box on step 4, line 5 on the Schedule E/EIC, you're going to need to complete the EITC qualifications questionnaire. The questionnaire is in the instructions for the E/EIC. It starts on page 4. And then after you complete that, then you'll go back and do the expanded worksheet. This questionnaire was taken from the federal 1040 instructions for line 27 and converted to see if you qualify for Illinois Earned Income Tax Credit. So in the past, all you've done is you've filled in all your dependents on the E/EIC, turned it over, did the back of it, answered the few questions, wrote down what you claimed federally for Earned Income Credit, did the math and came up with your number. Now you're still going to do all that, but before you start figuring out what your credit is going to be based off of, you're going to have to go to the instructions and do the questionnaire. That questionnaire will help you determine if you're eligible to do the Earned Income Tax Credit worksheet. After you complete the worksheet, that gives you the amount that you're going to carry back to the Schedule E/EIC and list what your federal earned income credit would have been and calculate and figure out your percentages. So we're adding some more steps for you to do. In order to do this, you're going to have a copy of your 23 federal form, whether it's the federal 1040 or the federal 1040 SR, and all required schedules and attachments to reference while you're completing the questionnaire and the worksheet. If you didn't have to file a federal return, you will need to do what we call a pro forma federal 1040. And all a pro forma return is, it's like a worksheet or a dummy federal return. And it will come up with what your figures would have been if you would have been required to file the federal return. And that's what you will use to complete your Illinois EITC. Please keep this form in the tax records. So if we ask for documentation, you will have exactly what you used to create the figures, and you won't have to go back and reinvent the wheel. When it comes to the questionnaire, you're going to complete steps 1 through 4 only if you didn't qualify for federal earned income tax credit, because you or your spouse or your qualifying child had an I-10 instead of a social. You and or your spouse, if you're doing a joint return, are ages 18 through 25 or 65 and older and do not have a qualifying child. And this questionnaire will be located on page 4 and 5 of the instructions for the Illinois E/EIC. This part of the E/EIC stayed the same. It is the top of the second page. This is where at the top is where you're able to claim any children that are eligible for earned income credit, but you didn't claim them on the front as an exemption. We may have taken out of a couple of lines, so we've shrunk that just a little bit, not much. Lines 1 through 4, those stayed the exact same. You still need to complete those. And that's coming off of your W-2s. And if you have a business, that information is all taken into account in this section. When you get to the bottom of that back page, if you qualify for federal earned income credit, you're just going to start with line 6 and go down. 6, 7, 8, and 9 did not change. It's what did you claim federally for earned income credit? Take that amount and this year multiply by 20%. Line 8, if you're a full year resident, you're going to put 1. If you're a non-resident or a part year resident, you're going to take the decimal that shows up on your schedule NR and place that here, and you'll be allowed to claim that percentage of the credit. And then line 9 is just multiplying line 7 by the figure you have on line 8. That did not change. The only part of this that did change is there is now a box on line 5. That is going to be marked if you did not qualify for federal earned income tax credit, but you qualify for Illinois EITC. And when you check that box, then before you can go to line 6, you're going to have to go through, do the questionnaire out of the instructions. Then after you do the questionnaire, that will tell you if you're eligible to claim Illinois earned income tax credit, which in turn will have you go through and do the expanded worksheet that's on the next page of the E/EIC. Once you complete that worksheet, the bottom line on there is the figure you'll bring over and put on line 6 and complete the form the rest of the way down, like you did if you were eligible for federal. This is what the expanded worksheet looks like. This is the first 16 lines. Again, we put in the chart that shows here's what the federal EITC income limits are. This is the front of the E/EIC. This is where you're listing your exemptions. It had no changes. Here's the complete back page, which we've seen the top and bottom already. Then page 3, this is the top portion where it's the expanded worksheet. This is the rest of it, part 2. This is where you're getting down to line 23 is the amount you're going to take back and put on line 6 of the E/EIC. This is what your federal earned income credit would have been had you not had an I-10 or had not fallen in the age brackets that we now allow. Do I need to attach anything to this? Yes. If you enter an amount on line 29 of your IL 1040, you must attach the Schedule E/EIC. We also need a copy of page 1 and 2 of your federal return and Schedule 1 of your federal return, and any other required documentation that will be listed in the step-by-step instructions. Like always, we will review the Illinois Earned Income Tax Credit, and if necessary, we may ask you to provide some additional information to verify the credit. If you fraudulently claim the Illinois Earned Income Tax Credit, you may not be allowed to claim the credit for up to 10 years. You may also have to pay penalties. Some helpful reminders. If you're eligible for Illinois Earned Income Tax Credit, you're going to check the box on line 5. You're going to do that if you didn't qualify for federal EITC, but you do qualify for Illinois EITC. Or if you received federal EITC, but have children that didn't qualify federally because they have I-10 numbers. So you may have been eligible based on your filing status and other kids that had socials. So if you've got a joint return and one child with a social, and then you've got one child that's on an I-10 number, when you filed your federal earned income credit, you were claiming it based off of joint with one child. Since Illinois now allows the Illinois EITC for I-10s, you're going to have to go back, do the questionnaire and the worksheet, because now you'll be eligible for more, because now it's a joint return with 2 children. So you may have to go back and recalculate. Another reminder is to complete the questionnaire on page 4 first. And this questionnaire was taken right straight from the federal form 1040 instructions for line 27. And we just tweaked it or converted it so it meets the Illinois qualifications now. The EITC worksheet is used to calculate federal earned income amount, and that is the basis for the Illinois, and needs to complete it after the taxpayer does the questionnaire. So you're really going to start working in the instructions. Then you're going to go through and do the last page of the Schedule E/EIC. Then you're going to go back and do what you would have done if you would have been able to claim it federally. So you've got a couple of more things that you've got to do on this form, but we've opened it up to more people qualifying for the credit. All right, now that I'm sure I've blown your mind with those 2 credits and all the changes, now what I've got left in my first part here is just some housekeeping, as I call it. There's a rev credit. The rev credit's been changed It was known as the Reimaging Electric Vehicles in Illinois Act. It's now being referred to as the Reimaging Energy and Vehicles in Illinois Act. This credit now includes more than electric vehicles. It includes renewable energy. This credit is administered by the Department of Commerce and Economic Opportunity. We allow the mechanism to claim the credit, which will be on the 1299, to see if they qualify or you qualify. All of those questions have to be handled through the Department of Commerce and Economic Opportunity. This is not a credit for going out and buying the electric vehicles. This is for the manufacturers of the electric vehicles, of the batteries, of the renewable energy. It's not for placing it on your property or owning one yourself. If you need more information, contact DCEO and they will be more than happy to help you with that. And this credit is a credit on the 1299, so it can be carried forward 5 years from when you earn it. On our Schedule M and in our publication 101, there is a list of bonds that are exempt from tax. Bond number Y and bond number Z in that list are the New Harmony Bridge Authority bonds and the New Harmony Bridge Bi-State Commission bonds. All the information we have right now on this is that for both of these bonds, for tax years beginning on or after August 19th, 2023, the bonds issued by the Bridge Authority and the Bridge Bi-State Commission are no longer eligible for income tax exemption. That is all the information I have on this now. If you have people who have those bonds, keep watching our website, and as we get more information, our website will be updated with that. Some of our 1299 credits, we've just extended their due dates. The historic preservation credit, it has now been extended to tax years ending on or before 12/31 of 28. The ABLE contributions, that one has been extended to tax years ending prior to 1/1 of 28. The hospital tax credit, it has now been extended to tax years ending on or before 1/1 of 27. Invest in kids. This is a credit that is out there where you can pledge to donate so much money. And when you make that donation, you're eligible to take a credit on your 1299. And the 1299 allows you to carry it forward. Invest in Kids will expire on December 31st of 2023. What that means is all contributions to Invest in Kids need to be made no later than 11:59 p.m. on December 31st, 2023. After that, you will not be able to contribute to Invest in Kids. Since this credit shows up on our 1299s, that credit can be carried forward. So for the next 5 years, all credits that were earned by the expiration date will be eligible to be carried forward. So this is the last year we can see contributions made. Going forward for the next 5 years, we can see them using the credits that they earned off of Invest in Kids.